Nifty has been trading in this tight range this week, 80 points or thereabouts on Monday, 150 points on Tuesday. And, we have seen, of course, the formation of doji, which indicates indecisiveness in the market. But overall, in my mind at least, it seems that bears currently they are on a better footing. The overall breadth is favoring them, and the base has shifted lower over the last couple of sessions. What's your sense of things over here, sir?
Good morning, Suyash. So yes, I agree that the Nifty has been oscillating around the 22,350 mark. Though the trend is positive, the momentum has been off in the last couple of trading sessions. So this is a holiday shortened week, and there is a good chance that there can be some cap on the upside temporarily. There is some global weakness which also adds to this. An important support which we are dealing with is 22,200. That's a very important support if you are looking from a short-term perspective. For day trading, it is 22,275. In short, if it dips below 22,300 during the day, you can expect some form of weakness. To challenge the trend, Nifty has to get below 22,200. In case it does, then there is a slight question mark as to whether the momentum is off or it will be in a range. But as it stands right now, it is holding on to the support. There is lack of momentum, so I expect the indices to trade in a range. The lower end of the band being 22,200 and upper end of the band, if you are a day trader, somewhere around 22,375.
All right, and I also wanted to talk about Nifty Bank because in my mind that holds a key here for the upside. The index finally managed to break past 47,500. In fact, that was the first close for Nifty Bank above 47,500 since mid-January. And time and again we had seen corrections from there on 47,500. Last time we were here, we fell about 1,600 points. But finally, we have closed above it. In fact, we are trading above it this morning despite the slight correction in the market. What's your take over here on Nifty Bank, Akshay? 48,000, is that the next big hurdle?
Yeah, so Bank Nifty today is the weekly expiry, and if you look at the positioning today, a lot of put writers have piled up their writing bets yesterday at the strikes of 47,000. That looks very comfortable for today's expiry. And even in the morning trades, what I saw in the first 15-20 minutes was that 47,500 was noting aggressive writing of puts in the first half an hour of trade. So the momentum is strong. The Nifty Bank is better placed over the Nifty index. A break of 47,500 just puts the Bank Nifty on a firm footing, and the all-time high levels of 48,500 plus is the positional targets you can look forward to. Today for the weekly expiry, 48,000 is a resistance. Bank Nifty is cruising as I see right now, and the chances are that 48,000 would be challenged. The call writing positions would be challenged during the day. So if you consider a buy trade, it has to be Bank Nifty over the Nifty index as far as day trading goes.
Good morning, Akshay. I'll drive your attention to Bharat Heavy Electricals Limited. Now, their stock crossed an 8-year high, rising almost 12% in the last few days. It went up to 271 levels. This is probably on the back of BHEL being the only bidder for NTPC's approved 17,195.3 crore Singrauli Super Thermal Power Project. Now, if I see a peer comparison between BHEL and the other company peers in the sector, BHEL has given 18% returns in the last 1 week, 82% in the last 6 months, and 254%, 0.87% in the last 1 year. Nowhere close, whether it is ABB, Siemens, or CG Power and Industrial Solutions, have anybody come close to those figures. Is it time to cash out on BHEL, or do you see the rally to continue? It's slightly down today, but just marginally.
Yes, so BHEL is down marginally, but if you look at the broader chart setup, it's been a fabulous run for BHEL in the past few months. And even a couple of days back on the price charts, we did note a strong breakout, which saw a price surge in the stock. This breakout was at the point of 240. So 240 is a very strong support. There may be some bit of weakness for the short term, considering the fact that it is highly overbought on trading parameters. So a slight cool off is justified. I would be keen on re-entering the stock in case I get it somewhere in the range of 242, 245, because that sets up a good trade on a risk reward perspective. Positionally till 235 holds for BHEL, I do not see any concern. You can continue to hold the stock. For short term, a rebound can see it again heading up for around 275 to 280. And on the positional side, that's with a 1 month holding, 290 plus targets can be seen in BHEL for the March series.
All right, another stock we wanted to pick your brains on, Akshay, is Zomato. I mean, there has been a big block deal. 19 crores shares have changed hand, which is equivalent to 2.2% equity in a block deal. This morning, it's worth about 3,112 crore, and the stock has crashed. It's down by about 4% and falling. But it has been a immense, phenomenal wealth creator for investors in the last 12-15 months. On 1 year basis, it's up around 200%, so has tripled investors' wealth. And in just 2024 alone, the first couple of months, up about 27%. What are the price chart levels that you'll be tracking on Zomato?
Zomato has had a phenomenal bull run, and if you look at the prices where there is a slight hint of profit booking, it is almost seen from the all-time high level. So these levels were visited somewhere way back in November 2021. That's the high of around 170 odd levels, and those are the levels which are vulnerable to profit booking because they are all-time high levels. The charts are highly overbought, and after such a fabulous one-way rally, there is ought to be some bit of correction or profit booking at the given levels. So short term, yes, there will be some profit booking in the stock. There will be a cap on the upsides. 140 on the downside can be tested. So I would say if you have a trading bet in Zomato, even from a 1 month perspective, it's prudent that you book out your profits at the current juncture. A dip around 135 to 140 would make it more suitable from a risk reward payoff. So I would recommend to book out profits from Zomato for the time being as the current chart reading setup goes.
Okay, Akshay, time to cash out from on Zomato at the moment. But what are your picks for our investors today?
So I have a couple of trading bets. These are short term, and the first trade is in ONGC. The ONGC, if you look at the way the government company stocks have started off the March series, the momentum pickup has been very fabulous. It's again regained momentum after it had lost in the last 10-15 sessions. So out in these government stocks, ONGC is one stock which has an excellent technical as well as a derivative setup, and I would target around 297 to 302 from the short term perspective for the March series. The stop loss will be 277 on this trade. And the second trade is in Apollo Tires. The auto space has been firing all guns, and I believe the auto ancillaries here too should be the next stocks to keep a watch on the buy side. So Apollo Tires fits into the parameters on technicals and both derivatives for a buy trade. Target 554 with a stop loss of 532. That's the buy trade I would recommend in Apollo Tires.